You are about to see monumental capital gains if you hold XRP, if you hold XLM. And let me get straight to the point. Why do I think that's coming in? It's not just a random news. I would actually like to take you guys to the IMF's Fintech Node. Now this gets extended. This is from earlier this year, and then from that March report, when you actually read through that, you get certain ideas. And they clearly mention the name, and that's where it gets interesting. Now look at the key word here. It's focused on cross-border payment. Now why am I highlighting that? Because keep this in mind. When they highlight the fact that this paper is about creating a digital marketplace to improve the cross-border payments. So it's not only the cross-border payments which is going to be impacted, it's also the digital market space. That means you are going to see a ton of capital coming in. You are going to see a big movement of money flow. Now, what does that actually mean for a lot of us? When you actually look through this, they take you through the interoperability, whether it's the domestic, whether it's the cross-border, and show you the swap lines, whether it's the central banking model or what they are proposing using the liquidity pools. And which asset do you think they name here? You actually see USDC as a stable coin for sure, which is now operating at scale on XLM, Stellar. But you do see XRP, and that changes a lot of voice, because when you go through and read through what they are looking forward, you do see the possibility that the market is about to explode. And when I say this, remember, this is a report in March from the IMF talking about the trust bridges. Now jump on to a recent one. There's this Bank of International Settlements in July 2023, and that gives you a huge narrative which almost looks similar to what the IMF wants. And that means we are talking about XRP. That means we are talking about cross-border payments and new liquidity arrangements, which uses massively scalable asset. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Right now, you're watching the price, testing these resistance, playing around with this critical level. We haven't actually broken below this, and we haven't actually broken above the mid-range support. So technically, you are in a consolidative area where you're watching whether we are able to break through the 0.73 range or we're going down below 0.68. That's what's important. But if you have at least few months here, then you're more likely looking at the fundamental side of things. And that's where you actually get to see this. That's where you actually get to read this, right? And as you see things clearly, it's about the future. And we went through massive documents in the last couple of years. And right now, we are watching a wave of new documents coming out, just pointing towards this one direction. And if you're here, thank you for hitting all those like buttons, and I'm watching, the like popping through compared to a lot of old videos. So if you are here, smash that like button. So if you actually take a model here, first thing, we would like to see what they are starting with, what they intend with this paper, with this report, because keep this in mind, Bank of International Settlement is considered as central bank of central banks. So them giving you this narrative now becomes super important. Why is that? Because just like IMF kind of pushes agenda and narratives in the BIS and other supranational organizations, BIS pushes the same idea into different central banks. And you're just watching almost similar things in both of these documents. Just IMF has it a little bit more in detail, going through a lot of different use cases, examples, taking you through what's happening with tokenization and the market working conditions. And now, when you actually read through that, what are they really talking about? This paper actually takes you through different payment arrangements, which is looking for the future, right? And that means you're actually looking at the existing structure, which is trust-based, because it's credit-based system. You send the payment in 3-4 days, they get the payment on the other side. And that is not great for the working capital side of things. So you need interoperability between different forms of money. That means now you reduce the time consumed and you don't actually need that amount of trust. If you actually go look at what they are looking for as the future expectation, it discusses how the tokenization of money alters trust links. So they don't actually want the existing system, they want something new, and allows for potentially more efficient market structure to exchange money. And this exchange of money is not just the domestic movement of money they're talking about. The paper ends with a suggested global marketplace to trade tokenized money directly across borders. How many of you really remember tokenization in Ripple? And that is a big thing happening in different parts of the world. It's not just in one area. It's not just in the Hong Kong. You're looking at the other side, like the Colombia, where you see real estate is being tokenized in this ledger. What does that mean? That means investors, traders, all of them now have ability to buy a part of a house, buy a part of an apartment. All those things are coming. Now, why is this important right now? If you actually look at the current structure where the commercial real estate space is about to blast, that means someone needs to take that over, whether it's a group of investors, whether it's the world using trading skills on these platforms. It doesn't matter. You need a change there. Now, if you actually directly jump on to what they're talking about, they do take us through different narratives, but then they actually give the narrative the private sector is rapidly building this infrastructure. What infrastructure is they highlighting here? An important question is who builds and operates such a marketplace and which rules will govern it. So that kind of gives you an idea that it won't be a platform where they don't have a say, basically. So you are looking at things which they are confident about. Now, international financial organization could do so since they already have well-established standards, some experience in making international transfers to and from the central banks. And another question is whether the public or private sector should be or will be involved. And that is where they say private sector is rapidly building this infrastructure. So they're not actually talking about the public sector. We all know they are really slow. And when they take that a step further, they show you 3 models arise: a private settlement asset and a marketplace. Key words. Words means a lot in these kind of reports. A marketplace, whether it's for NFTs, whether it's for real estate, whether it's for speculation, you have now created a marketplace, which is liquid, such as Ripple's XRP. They are naming it. There were times when the Bitcoin maxis and Ether maxis were saying they're just naming it Ripple. They don't name XRP. Now they would be disappointed, but this is the fact. An open source marketplace such as Stellar Foundation, or more recently DeFi networks, right? And a marketplace and settlement asset backed on unbacked crypto assets such as Strike, which leverages Bitcoin, and a Lightning Network. Now we all know how things work there. You need that individual channels to operate. So for a central bank or for retail movement of money, that's not really useful unless you are going to buy the coffee from this particular shop every single day. Otherwise, it doesn't actually work like that, because now what Lightning Network does is it doesn't actually execute everything on the main ledger. It takes it outside so that it can scale and execute it in that secondary ledger. But for you to fund that secondary ledger, you need to move your money from the main ledger to that one, where you create a channel between others so that you can do the payments. That's a little bit of a mess when you do have assets like XRP and an existing marketplace for private settlements. And that's where they say private sector is rapidly building this infrastructure, rapidly building this. And over the last 2 years, we have actually seen extensive growth in what they have been doing. Now, think about this. They're giving you Stellar Foundation, they're giving you Ripple and XRP. These kind of tend to show that they are looking at this. It's not just we who are reading through these reports. It's the big portfolio managers, it's big Black Rocks, all of them understand the fact that this asset is the future. It's going to be there for a long period of time. And that means if you know what's coming, you are going to make huge capital. Going to the conclusion, how do they actually end this paper? What do they actually give you guys? The paper offers two possible improvements for the cross-border payments. So one, this is pointing towards the cross-border payments. And when you read through this, you actually get the narrative where they actually clearly give you, they're saying that, okay, cross-border payment is having all these frictions. Why? Because not all these correspondent banks trust each other. Not all these clearing exchanges trust each other. And they actually go through different simulations of how these models actually work and all, right? But then you actually come back to see that, yeah, that's the case. But if you actually look at things a little bit more focused, you'll understand the fact that, okay, if that is the case, then how can they actually come on one ledger where they can execute this cross-border payments, right? And that's where they were saying this new infrastructure, which is being built by the private sector, has a lot of use cases. So this, first, there is a possibility of a global clearinghouse that eliminates the need for a complete set of bilateral trust relationships. I mean, that's great, because once the governments actually enter into the CBDC era, you don't need the China to trust the US. You don't need the Iran to trust the Russia or any other country. You don't actually need the North Korea to, think about US. That's not happening, because you are on a clearing house, which is at global scale, which actually eliminates the requirement of you to trust the other guy, because the payment just go through. That's happening. Great. However, various practical hurdles may arise, such as obtaining the political backing, that kind of thing will forever be there. Why? In the politicians, which we see like in the US, you have people who are like 90s, 80s, 70s. I mean, they don't understand the technology, and most likely they don't really care about the next 10, 20 years. For sure. I mean, why would they, right? Now, then you actually come here and see this. Second, this paper advances a more promising model for a marketplace to trade tokenized money directly across borders. There is a reason why XRP can be divided into minute elements of money. There is a reason for that, right? And this is one of that. A shift towards digital money may reduce the need for a bilateral trust relationship and foster more efficient competitive market making. Now you go look at the news where you actually see automated market making happening in the XRP ledger. Now you're like, okay, all of these things are actually there. So they're actually putting it in front of us in a way that they say this, still the majority won't understand it. And that's where we stand on the edge, reading through this, reading between the lines and understanding all those we have seen in last 5-6 years and looking at what's the potential future, including to explore models to enhance market liquidity and establish sound governance. And that's exactly where Bitcoin and those kind of stuff actually goes out. Like it just gets flushed. Why? Because they are looking more into the governance model. If you have listened before to Jim Rickards, he has actually clearly stated like, Bitcoin and Ether, that doesn't work. Because the governance model is something important for all these big institutions. And when you take that into account, you now understand that they are all looking at talking about the Federated Byzantine Agreement. And that FBA is on what XRP works. That's the protocol That's the actual governance model. Same, almost similar for XLM2. And that kind of gives you an edge of why these assets are being repeatedly named. And all of these liquidity swap lines, a lot of people don't actually understand the central bank swap lines because it doesn't happen in millions or hundreds of millions. They put things in billions. And it's hundreds of billions. Right? So when you actually look at how much is happening between Europe, between Japan, between England, between Australia, all these different nations, now you understand they do need a highly scalable infrastructure, not something like Ether if they really want to send this much amount, because central bank really don't want to pay that much amount in fee using that kind of a network. Why would they do that when they can actually use network which gives them near zero cost option? One. Two, if they are holding on to that settlement asset, the price is appreciating because it's burning a part of it. And when they are sending in billions, the burn rate is now much higher than when we send $10,000. That's me, the retail. This is the wholesale use case. So if you actually take a small chunk of this into your brains, understanding the fact that, okay, this is massive, now you go look at what's happening. Now you go look at the narrative in the media, cryptoverse. Ripple effect as explosive XRP leads the market charge. Okay, that's coming in the Reuters, and that's on July 25th. So just 2 days back. Now you're going to look at what the Forbes actually gives you. They're actually going through the price prediction, and I'm like, wow, okay. And they even highlight the fact that there was a financial analyst or a portfolio manager who was actually giving you the thought process of a $30 XRP, right? He was actually giving you that narrative in 2023. That's here. XRP would hit at $30 per coin. And this guy's actually say prediction fails to consider the mathematicality 100 billion supply as usual. But you do understand that now that's not there in the marketplace. One. Two, you don't have that amount in circulating supply. If you have your XRP on a ledger which is outside the market, it doesn't impact the price fluctuation on a daily basis. And a lot of people which have gone through the one-on-one sessions, all of them have either in the Zoom wallet, the ledger, the Atomic, the Tracer, all of them are out of the market. Maybe 5% or 10% of their holdings are on the exchanges. So you really don't see much of a movement for those in the exchanges. 100 billion supply is the total supply. That doesn't need to be considered when the actual price fluctuation comes in. Because if that price movement happens on a day, you look at the circulating supply on that day, which is in the marketplace. So yeah, these guys actually fail to understand that, but you still have predictions out there which actually shows that there is a possibility this asset may actually go to $30 a coin. Now, when you see all these news narrative and how things are evolving, these actually become super important. Say, if you actually look at what is being highlighted here, we're still figuring out things, agreed, but the point he's raising is US institutions can literally source XRP from the exchanges. They really don't need it from Ripple. That means that part is now secure. That part, they're not actually dumping into the institutional sales. They may actually put it in, but we all know when the escrow is coming out, if they are not selling that to institutions, what happens? It goes back into the escrow. That means the supply is not actually dumping into the market. It's a tiny area. And if you listen to these videos, it kind of gives you the idea. They are looking at the tokenization and they are big on that. And that's exactly what we just saw in the IMF document, in the BIS document. And when you go through the news, the narrative, you're looking at all these different areas to understand what the media is giving you. Ripple effect. Okay, that's great. You're actually looking at that. SEC appeal, not a setback. That's in Yahoo Finance. So you're looking at the Reuters, the Forbes, the Yahoo, all of this, and you kind of get to see like, okay, something is changing. Something is big. And that's coming in. And when I actually see things like this, I'm like a great shout out to this guy out there. You know, I respect him for what he do. And the perspective here is clear. This is about the safe haven assets. Something wrong is coming on our way. I hope we all are doing great at that time. But showing this is a clear signal. Something is coming. So if history is about to repeat, there is something happening in these levels. So it's really important for us to understand what's happening in the market, why certain assets are running, and what some of these actually look like. If you literally go through all these assets one by one, looking at where they are in their price range, the support, the resistance, the targets, all of those, you'll understand some of them are not looking great. 100% agreed. Some of them are looking explosive. And that's one of the reasons why we usually go through the Ask for TA to go through a lot of these assets. Right now, we have just started that session. It would extend for next 3-4 days, going through all of these assets in the marketplace. So if you are looking for something like that, you can actually look at the Patreon. The link is given in the description below. So if you haven't hit the like button yet, smash that for me. I appreciate that a lot. I'll meet you guys on the next video. Bye for now.